I want to start off with just your expectations for today and the trading day. There are many times that we see futures lower, and then throughout the day, the markets kind of work their way higher. Do you believe investors are genuinely concerned about this government shutdown?
Frank, maybe we see a little bit of a retreat like we're seeing today, but I don't think at this point investors are overly concerned. When you look at the 10-year Treasury, which you mentioned earlier, is flat. The VIX is still around 16, 17, and we're seeing a modest move down today, but that's after the best September we've seen in about a decade. So I think if it's prolonged, that may change, but as of today, I think it's somewhat muted.
All right. When we're looking at the bond market, do you see opportunities here? Do you see the potential for a spike in yields? And if so, is that an opportunity to buy bonds and try to capture some of those higher yields, especially with the thought that we might be in a rate cutting cycle with the Fed?
Yeah, we would be more apt to add to our bond positions on a higher level. Right now, we think on the 10-year in our work is slightly rich. And, historically, when we look at government shutdowns, you see a modest rise during the shutdown, and then that modest rise turns into a decline thereafter. So again, we're there. We're slightly underweight our bond positions, but not at this level. We're not that excited about the current yields.
All right. Your word of the day today is noise. So is the shutdown just noise, or is there other noise that you think investors either need to block out or maybe even pay attention to?
Yeah, well, the word of the day was specific around the shutdown, because we've looked at this, and you've mentioned this on the program today. Historically, we've had 20 shutdowns. When we look at during the actual shutdowns, the S&P has been flat and up 50% of the time. That doesn't mean there's not variation, doesn't mean there's not volatility, but it tends to be short term. So from a portfolio standpoint, Frank, we don't want to make any real drastic changes based on this. I think at the end of the day, in 2 weeks, earnings season starts again, and that will be the North Star of the market as it has been all year.
Yeah, Keith, by the way, we're looking at the performance of the S&P during government shutdowns. During the most recent one during the Trump administration, we actually saw a pretty considerable gain over about a 5-week period for the S&P. But the market's not the economy. Any concerns about the broader economy? We're hitting on this. This is a data point from Moody's. For every week of the shutdown, it's about 0.1% of impact on quarterly GDP. Is that something to worry about as we see inflation seems to be persistent? And it feels like just a couple weeks ago, we were really worried about stagflation.
Yeah, I mean, to be fair, this complicates the overall outlook. We have less data. We have this kind of divergence between the labor market and other economic data. Frank, what's interesting, the Atlanta GDP right now, estimate is around 3.9 for the quarter. So it doesn't drastically change things. There could be a wrinkle if we actually do see people that are let go, not that they're actually not furloughed, they're let go. But in the grand scheme of things, there's so many different narratives. I don't think this is going to be a game changer for the overall economy. We actually expect a little bit of a pickup, but on a short term, it just adds to some of the economic uncertainty.
All right, your pick for us today is tech. Is that a safety trade, or are you seeing a pullback that is very quickly recovered when it comes to tech and a longer tail of opportunity going forward?
Yeah, Frank, as we've talked earlier this year, our main theme for this bull market is, AI and tech. Mm-hmm. And despite, even if we have a government shutdown, that's not going to likely change the trajectory of tech and AI spending. And that's where the strongest profit growth is as well. So we want to stick with that key theme. One last statistic. Over the last year, tech's up about 30%. A lot of questions, are we in a bubble? Bubble periods, we normally see something closer to 100% on a year-over-year basis. So we still think there's more to go here in the sector.